Welcome back to Macro Examiner, where we delve into the latest economic data and trends. In today's episode, we focus on the U.S. inflation rate for June, which experienced a notable slowdown. Let's dive into the details. The annual inflation rate in the U.S. decelerated to 3% in June, marking the lowest level since March 2021. This figure is a decline from the 4% recorded in May and slightly below the market expectations of 3.1%. The slowdown can be attributed, in part, to a high base effect from the previous year when a surge in energy and food prices propelled the headline inflation rate to its highest levels since 1981, reaching 9.1%. Looking specifically at energy costs, there was a significant decline of 16.7% in June, compared to -11.7% in May. This decrease was driven by a substantial drop in prices, including a 36.6% fall in fuel oil prices, a 26.5% decline in gasoline prices, and an 18.6% decrease in utility gas service costs. In contrast, electricity prices experienced a modest increase of 5.4%. Additionally, inflation eased for food, with the rate slowing to 5.7% in June from 6.7% in May. The housing sector also witnessed a moderation in inflation, as shelter costs rose by 7.8% compared to 8% in the previous month. Several other sectors also experienced smaller price increases. New vehicle prices rose by 4.1%, down from 4.7% in May. Apparel prices increased by 3.1%, compared to 3.5%, and transportation services saw a decrease in inflation to 8.2% from 10.2% in the previous month. In contrast, there were notable declines in certain areas. The cost of medical services decreased by 0.8%, and prices of used cars and trucks experienced a significant decline of 5.2%. When examining the core inflation rate, which excludes volatile energy and food prices, we observe a drop to 4.8%. This is the lowest level recorded since October 2021, suggesting a broader slowdown in underlying inflationary pressures. Overall, the June 2023 inflation data points to a notable slowdown in price growth, driven primarily by declines in energy costs, moderation in food and shelter inflation, and smaller price increases in several sectors. This moderation in inflationary pressures brings some relief to consumers and may have implications for monetary policy decisions moving forward. That wraps up our analysis of the U.S. inflation rate for June 2023. Stay tuned for more updates and insights on macroeconomic trends and their impact on financial markets. Thank you for joining us on Macro Examiner.